All right, so this is going to be a pretty information intensive episode. I'm not even going to do like a proper intro. I would genuinely go and get like a beer or a glass of wine or a glass of scotch or whatever drink you like, and really just sit here and lock in for this because we're at a huge pivotal point, especially with how the week closed, including Bitcoin's Sunday close. But real quick, just before we get into the kind of charting stuff, on Tuesday, we have ADP employment change and preliminary GDPs. This is kind of going to be a good insight to what the GDP was quarter over quarter. So the reason I think this is so important is because the previous was 3.8, and now it's forecasted 3.2 to come in lower. I'm very curious to see with how the whole tariff fiasco went in the previous quarter, what this number comes in at. I think it'll come in right around this number. I think so. The only concern I have, I guess, is how the AI trade is slowed down, and I'm wondering if there'll be a little bit lackluster GDP just from investment growth in that sector, because that's been propping up GDP for quite a while. And this is also delayed, right? So I think it'll come in line around this, but I'm open to see if it's slightly above or slightly under. But that's pretty important going into Tuesday. Durable goods, GDP price index, consumer confidence, richer manufacturing. Japan does monetary policy meeting minutes. Unemployment claims Wednesday. Board of Japan Governor Ueda speaks. That's interesting. Bank holiday for Christmas. So just about Wednesday. Wednesday's a half day, so trading closes at 1 p.m. EST, and then Thursday it's closed. So you basically have Friday, Wednesday's a half day, Tuesday, Monday to trade. Yeah, just thought I would say that before we get into the video, just because I think it is important. So we're going to start off with Bitcoin here. Bitcoin had an interesting weekly close, and we'll get into it. All week it was honestly down. Like it was pretty volatile, to be honest. Like we went from lows to sweeping up to one of the highs here, which is a point of control point on our TPO chart. And kind of fell back into range. It kind of just stayed suppressed between 88 and 89 all weekend, which is just normal, like low volatility on the weekends. A couple weird things happened, like with the tanker seizings and stuff, especially being a Chinese ship. I'm curious to see how China responds to that. I know they did say that they wouldn't stand to the U.S.'s bullying, and that if the U.S. pissed them off, they had no problems but to pull the plug on them. So we'll see if the trade wars come back, that's for sure. But let's look at the weekly here. So before we get into TPO, so I want to actually look into the weekly here and where it closed, right? So it closed here, kind of on a doji. I think that's what you'd call it. Do you call this a dragonfly? I don't know. I don't care for the pattern names because they're all so similar. But regardless, we closed kind of, it looks like in this 88.7, 88.6 range. We'll have to look at our TPO chart to see where we exactly closed. So bears failed to hold it lower. Bulls failed to hold it above the previous weekly close. So this is still pretty undecided, right? Yeah, this is, it just makes things interesting, right? And going into the monthlies here, you know, is it going to close red again? Or are they going to try and close it green? And then another thing we could look at too is the yearly, right? Are they going to close it red? Right, so are they going to try and push it up here and you know, make it green, or are they not? And mind you, you only have, I mean, this trading week is 3.5 days of trade, and then 3 days next week, Monday, Tuesday, Wednesday, right, for OPEX and the monthly close. So this gets weird, right? This gets really weird, and I think this is why price action's been so volatile for sure. Yeah, I don't even really want to talk about this more. I really want to look at the TPO chart and go in there and really dissect some stuff. But I will say this. Don't be surprised if there is some weird attempted rally here towards the end of the month, right? And just because bears have failed to kind of send this lower, I totally see it just kind of trying to fight its way up, right? And I got a couple pathings I want to share with you guys as well. So let's just get right into it. And let's just start off with our daily. Okay, so what do we see here? We opened right here at 88.6. So we actually reclaimed back into the 4-week value area low, and we stayed above the previous year value area high. So that's actually a good thing for the bulls. We have a huge unfilled block down here, huge unfilled low single print, a very poor low and imbalance down here. Okay, what we can do now is we can combine most of this. So this is kind of your range now for the next few days. We got 3 days of overlapping value. So essentially what you want to see is to not get acceptance lower, right? Like you don't want to have this come in and push back down, right? That would be the bad case. At this rate, since we closed back into the value here, I don't think it will send lower. I would start looking for these single prints to get filled, and I would start aiming towards the yearly open in the previous 4-week value area high. Okay. VWAP here did tick up a bit, which is interesting because fighting to get over it is going to be weird, but if you can get above it, it's actually good. And then if we go up a little high here, you know, our 90 days is still on the decline. It's coming into our 365-day VWAP. So this gets just interesting, right? Because what we could see is, like, let's say, you know, we kind of do this and bounce and then come up and test this 4-week value area yearly open. Like, it doesn't have to be this exact pathing, but what I'm saying is if we can hold this range and push up and fill these single prints and try and retest this value area high. Thing is closing a weekly close above this value, right? Does that make sense? So if they can really hold it up here, I would say leave this behind, and that's the most bullish scenario, right? Don't let acceptance back into this range. Don't even come down here. Hold the force upwards, right? Keep that uptrend going. That's the bullish case, right? There's a couple things we're gonna have to get into on the S&P and the Nasdaq to kind of make this all come together. There's still divergence there. I mean, it did set a lower high, but it failed to reclaim some key levels on both indexes. But it stopped out kind of right where I predicted. It was 68.20 to 68.35, and it's close at 68.34. So that just makes things interesting. So again, we'll get into that later. But for Bitcoin itself, you need those indexes to keep the upwards pressure. And I believe an attempted Santa rally will happen. Will we hit 7,000? I mean, I've been saying no since October. Again, if we get there, it's a pin, and everybody knows that, right? And those strikes still don't go in the money if it closes there. And yeah, so we're not far away. Like realistically, futures are up, the Nasdaq's up. Nasdaq actually opened lower, but it's a little bit up right now. But you kind of have to see how this plays out on a Monday, especially after this recent Friday's OPEX. Remember, this month's a double witching, right? We had Friday, now we're gonna have the Wednesday of next week. Pardon me, the 31st. So we're just gonna have to see what happens. All right, but for right now, the trend's up, and this is fine. All right, we've had no break below kind of since. We've had some failures to break below, right? But so far, everything's honestly like in a bullish scenario, it's pretty good. So that's our one pathing that I have kind of pathed out. If for some reason we get some weird spook Tuesday, yes, you can come down and fill this. Hopefully you hold this and recapture, right? Had it not been set up like this, had we closed under the previous 4-year value area low, I would have said it's going to go sweep the lower 80s. But yeah, it's hard to say. There's a lot of bid asks up here at 93 to 94 being asked to be filled, as well as a couple big ones down here, 83, 85, and the one big one is down at 75, which happens to be Sailor's average. Let's actually just talk about that real quick. So this was an article published a couple days ago. But MSCI is supposed to decide by January 15 on excluding digital asset companies from indexes. But it could soon be dropped, right? So let's read this. So MSCI and potentially other major stock indexes, which now say cost Bitcoin holding giant up to $9 billion demand for its shares, hurt the wider appeal of the sector. After queries from clients, MSCI in October proposed ditching from its global benchmark companies whose digital assets represent 50% or more of its total assets. Says they resemble investment funds, which do not include its benchmarks, but many such firms argue that they are operational companies developing novel products. MSCI's proposals unfairly discriminate as crypto, whatever. So the MSCI will decide by January 15th. So keep that in mind. I'd probably mark that down in the calendar or something. So in a subsequent public letter to MSCI, he and Strategy CEO finally estimated that exclusion would result in $2.8 billion of its stock being liquidated and would chill the industry. So what Saylor and the other CEO are saying is you kind of get like a crypto winter, right? The proposal would shut DATs roughly out of 15 trillion passive investments inversely, drastically weakening their competitive position, they wrote. And also, TD Cowen estimated in November that $2.5 billion of Strategy's market value comes from MSCI and $5.5 billion from other indexes. JP Morgan estimated that Strategy faced $2.8 billion of outflows if MSCI kicks out the company. This might be a really good scalp setup short for risk reward on MSTR as well as on Bitcoin. Rising to 8.8 billion if it is good for other indexes, which include Nasdaq 100. Nasdaq declined to comment if it kept Strategy in its Nasdaq 100 during this month's manual reshuffle. Besides Strategy, MSCI's preliminary list 38 companies of risk of exclusion with a combined issuer market cap of 4.6 billion as of September 30th, including Capital B. Interesting. So that's just something I thought I would share. One thing to say, like I'll be honest, I do think it still goes lower before higher, like before the 365 TPO retest. If God forbid you kind of just, you get the actual move and just go right for it, by all means. But I think the bear market would be confirmed faster. So if I had to guess, we're just going to come up and I'm going to come up and try and sweep this again and get a retest. All right, and that would be kind of our 1, 2, 3, 4, 5, 6. That'd be a 7th retest of this value. Jesus Christ. So I think we would sweep it and ultimately break below again. It's hard to say when and what would happen. There's a couple really big puts developing. I mean that MSCI one is one, but it's this yen issue and the Japanese bonds that are really like spooking people, I think, and financials really showed that last week. We'll get into that again in a bit, but I'm just saying, like, by no means is the market's out of the woods yet at all. Like, nothing's clear yet. We got a lot to talk about, but Bitcoin's just doing weird stuff. So there's a lot of asks up here that want to be filled. There's a couple below that are holding up, as well as the big one at 75. So let's talk about this, right? There was some asks at 94 that kind of got pulled, and they moved down closer to the 92,000 range. All weekend it was kind of just suppressing before it finally kind of ate up some of that liquidity, but there's still a couple asks here flying in to hold this down for right now. We'll have to see how this opens tomorrow. But these are those low 80 bids that are still in here, as well as the big one here is kind of sitting around 75. I thought, honestly, it would sweep this and stop out a lot of late longs before trying to attempt higher. So far, it hasn't done that. So far, we're still closed higher. So I think this pressure here is still holding Bitcoin upwards. But again, I'm really curious to see what happens in that 93 to 94 range again if we get it, right? A rejection off that probably would not be pretty. So I guess what I'm trying to say is that I think this is possible within the next, week and a half to get up here. But I'd be curious if in January it sweeps lower and then tries to re-rally again to that 365 VWAP when that comes down a bit more. And then we'll see what happens, right? So that's just something to take note of. What we can do now is we can go in and do our weekly TPO. We can do now, since it's barely closed within it. So here we go. Now this is adjusted. So the previous 4-week value area low now is now closer to 87. And this value area high here is now closer to 92. Interesting. So that changes a lot. Yeah. Interesting. So the value area low is now closer to the April value area high. So that's not good. This means basically that it's like the value's dragging lower, right? Like it's failing to get higher, it's still dragging lower. And I mean, it makes sense, right? Like we had some pretty nasty sweeps during the week. But this makes things just weird again, right? So, man, like, I don't know. This is really weird price action. It looks way more bearish than it does bullish by far, but it's like figuring out the exact move of what's going to happen it just gets more complicated right now, right? Again, we're gonna get into more of that in a second here, but just for Bitcoin itself, I mean, it structurally doesn't look bullish, doesn't look bearish. It just looks like it hasn't figured out directioning. Sorry, it does look more bearish than bullish, but like it clearly shows that directioning is not solidified. Like it doesn't know what it wants to do. I will say this is that if the index can somehow make a new high, like in the S&P, I mean, by all means, bulls on parade, I guess. But again, there's that huge negative gamma up there and a bunch of puts, right? So I think we're gonna just leave Bitcoin like that for now. I mean, I guess I'll just take a look at the ETH daily chart quick, just for the ETH boys. Yeah, ETH even, just rejected off 365-day VWAP. So yeah, this is interesting. More single prints down here in ETH. Yeah, like I don't know. It just directionally, it just looks like nothing is figured out by any means, and there's just not much for me to say. Like the pathing is weird, right? There you have it, right? ETH, I mean, like none of these alts have really caught a bid, right? This is just I don't know. Like it just structurally, it just doesn't look pleasing to trade. I mean, I guess long resistance, long support, short resistance. I don't know. I think for both indexes, personally, I think they're just setting lower highs and shit. Yeah, I think both assets there are just setting lower highs. It's a bit of a war, right? Bit of a war. Yeah, looking at the weekly here for the SPX, right? Like, it didn't get back into the previous week's highs. It closed my hanging man. It just, I don't know. Like again, it's just imbalance and undecided, right? Failed to accept higher, failed to break lower. We'll get into the daily patterns in a second because it was actually pretty interesting of what happened. But I mean, like even the close, like it was still under our all-time high VWAP, right? And if we look at our VWAP low here, so these VWAPs are about to cross, which is a little interesting, right? This is our all-time high, our tariff low. These are going to start crossing, and that's not a good sign at all, right? That means that the steam has stalled out. We're still accepting lower into the all-time high VWAP, and the chance to break back into this lower end VWAP, the green VWAP, is not good. That means you're accepting into lower value, right? Things get weird here because you close right at the resistance, and the next thing above that is the call wall again at 6,900, which is right up here, right? On a low volume and low volatility trading week. Well, I guess actually it could be a volatile trading week, but it is a low volume trading week. Do I think we hit 7,000 this week? No, especially with how a couple of the big boy iron corridors came in. We'll get into that in a little bit here. But this gets structurally just very difficult to trade. I'll be honest, if you don't know what you're doing, I would just go spend Christmas and New Year's on holidays. There's going to be a brand new 365 days to trade in just over a week and a half, right? I don't see it being worth trading. I think it's just, I think if you don't know what you're doing, there's just no point. I've just loaded my Leap puts and my Leap VIX plays for February. That's it. I don't really care, and I'll probably just double down if we do get a push higher. But I will say this, just from being in the market so long, I think they either pin it right at 7,000, or it gets up to like 6,950 or 6,985, and then flukes down closer to 6,700 again. Right? Because like a third retest and failure to break above would probably be a very bearish sign. Right? That's something we can just like if we were to make, I don't know, let's do something like this. I don't believe in this type of trading, but I mean, let's just say we got something like that. I mean, yeah, you would get somewhere into January 6th here, January 8th. Yeah, anywhere from the 6th to the 8th here of just potential bearish pattern forming out here, right? Like it would do something like this where it goes bang and then down, right? It could break up, but I'll be honest, the way the profile is, and I've shared this with you guys already, it's all negative gamma above there plus a pin at 7,000, right? It's all just net dealer short up there for the most part. So it gets weird. Like it gets really, really weird here. And again, I think this is why it's better to either one, you know, this is not financial advice, but I think the short plays from up here have been great. And I mean, it is a scalper's world till it isn't, right? The structure hasn't fully broken yet, but it's very close to it, right? All it's going to take is one good spook and Armageddon. And we've explained how the 7,000 call structure works when it expires, how much pressure it puts on the index. We've got issues coming up too, right? Like there's the tariff ruling coming up, potential debt crisis for Japan. There's like geopolitical tensions. We've talked about this quite a bit, but you know what I'm saying here is we're running out of fumes, right? So let's see what we can do here. So we'll start off on the weekly TPO, right? Where did we reject? Right at the previous week's point of control, right? This is our multi-week composite here, and again, we just basically stalled out right here. So the close is on this block, which is the same block that that point of control was at, right? This gets really strange because look, we came down and filled these single prints from back here and bounced up, and it happened to be right where the dealer long was. But again, we failed to break out, right? So the question is, do we get just to look above and fail, or do we just break back into range? Since futures are up, and as long as they stay up going into the hours, right, like the opening hours, I mean, you'll probably get a push up, right? But then you start targeting this value area high here, right? And from a Greeks and Gamma perspective, I mean, I'll be able to see what happens, what the open looks like tomorrow at 6 o'clock. But I'm not going to be able to share that with you guys, obviously. So just maybe keep an eye on Twitter. I'll probably retweet it or put a photo of it, of kind of what that day's looking like. But again, this week, short and trading week, volatility is probably going to be there a little bit. But it's also going to be low liquidity. So expect price to easily get pushed in either direction. If I was to take a solid guess here, I think we just stop the week between 6,900 and 6,800. Like I think that 100-point range, just for reference, I think we're somewhere between 69 and 68 by the end of it. I really do. Yeah. So listen, the push for 7,000 is right now if they're going to do it. Okay. I'll be honest, should have been able to make it already. And I said this weeks ago, should have been able to do it, and it hasn't. Right. Let's break it down on the daily now. So we got U. We can combine, and that's about it, right? So we could even argue that this multi-day composite here, we just stalled out at its value area high, and I mean, it's going to be closed above this point of control, but on the weekly point, we closed at the weekly point of control, right? So there's these single prints here that we could probably target right here, right? We could probably target this, and I probably would target this week. I'd probably see if you can get into this range. So that's interesting, right? Like again, are we just going to reject off the highs, right? It's like fill these single prints and look above and fail? Or are we not? I'm just worried about this whole VWAP crossing stuff. Historically, when this has happened, it's just not good. If you guys want, real quick, just to kind of demonstrate what I mean by that, let's just go back to YouTube here. And okay, let's say this was the COVID low, and this was the high before the crash. So this is a good example here. See, when they crossed here, it like attempted to climb up and then ultimately just sank, right? I'll change the color here so this is easier to kind of look at. But what happened was these crossed, like the VWAPs crossed, right? So that's from the COVID low to when that all-time high was before April. They crossed right here. It tried to bounce up and get acceptance above and ultimately just sank down, right? And it did bottom out at the COVID VWAP again, right? Like it has been kind of the last bit. But I mean, I would at least start targeting, you know, somewhere down closer to the 6,000 range again if you get that break below 6,400. From a GAN perspective, there's nothing below 6,400 to save it to at least 5,800. Okay, this is something else we got to talk about. So this came in on Friday, which I think is weird, and this is just an unusual trade, and this is why I'm pointing it out. Someone is opening a butterfly sweep, like a butterfly put spread, expecting prices to move into these ranges by February. This is close to $30 million, right? So, you know, I mean, it's closer to like 12.8, but, or sorry, it's closer to like 28 million, but you get what I mean. This is a big bid. So this is probably about 2% of somebody's net worth that they're betting. 63 days to expiry to hit these lows here in the SPY. This is a bit of a warning, I would think. And I want to see if this open interest is still there on the open tomorrow. But that's a weird sweep. Okay? Like that is a very weird sweep. And we've seen kind of some of the puts that are on the table already, just like what I was talking about earlier. But I thought I'd point this trade out because this came in on Friday right as we went into resistance. So it's just something I would say take note of. Like, don't get me wrong, trades like this happen all the time. But for this short of expiry, and for the amount of capital put into it, and the size it was put into it, that's a weird one. That's a weird one, right? That's not long day to expire here. I mean, it's going to be closer to the 50s now because of, you know, the weekend and whatnot. But that was a weird sweep that came through that really caught my eye. That I went, huh. Well, 50 cents bidding February. These guys are bidding February. And we kind of know what's on the table right now. So I just thought I would share that with you guys. That's like this is definitely a weird butterfly spread to be opening. So we'll see, right? We'll see. I think this is honestly a pretty likely outcome. If I'm being completely honest, I do think we start sweeping a lot lower very soon, like very soon. But I thought I would share that with you guys. I think that is a pretty important trade to share. But yeah, that's kind of all I have to say for the SPX right now. Last thing I will say, just looking at our 90s fractal here, we did our V-shaped recovery, right? Now, where are we going to get our peak, right? Like, where's this peak going to come into before the decline starts, right? And again, this has been following so closely, right? We could look at our SPX divided by M2, right? Like, we could look at it this way too, where we might get this quick push up before a larger drop. And then I think the next year is kind of just a push up and sideways before going down, right? So there's a couple ways to look at this. It's up to you how you want to look at it. Our JP Morgan caller, they start hedging very soon here, right? So I think by the year end, I'm gonna just be bold here. I think it closes closer to 68, 6700. Again, if it hits 7,000, I'm not mad. I'm not sad. I don't care. I just know the outcome of what happens after that, like when it hits 7,000, right? I think I've explained that enough by now for those who have been watching. But the only other thing I'll say is Japan ETFs, Japan is about to start selling ETFs into January, which is, again, going to put more pressure down on the index. And a report came out the other day, too, of JP Morgan being a little bit underwater. Not them necessarily directly. I mean, JP Morgan has a shit ton of capital. I would say they're probably the best bank in the States, the one that are, you know, like I think JP Morgan is probably the one that's if shit ever hit the fan, they'd be the last one to go under, right? But I do know they had a couple of vol funds blow up in October. They had a couple of hedge funds blow up in October, November. And there's a couple of hedge funds under them that are levered on Japan, on the Japanese yen and Japanese bonds. And God forbid more shit happens and they have to sell off just to drag the indexes down more. Or, again, Japan starts selling off ETFs. I would just be on the lookout, okay? Listen, I don't think we go straight to zero tomorrow, and I've been saying that for the last few weeks. But I do think the decline is coming in Q1, and I think on these pushes up here for both Bitcoin, the SPX, whatever, I think is a great time to take profits. Okay. let's talk about the Nasdaq now. Okay. This is still lagging. Like same with the SPX. Sorry, I forgot to mention this, but we're just setting lower highs. Okay, we haven't got any crazy stuff. Like you could argue that this is a shoulder and this might build into another shoulder. And you're just getting lower highs being set, right? High, lower high, lower high. Where's this week gonna end, right? So just keep an eye out for kind of what's going on here. But as for the Nasdaq, I mean the Nasdaq's still really lagging, right? Oracle and stuff had a decent pump, sort of core weave, but I would argue that that's probably just gonna get sold off again soon. It's just gonna drag it down harder. But again, like here's your high, here's your lower high, here's a lower high, here's another lower high. I guess this would be a higher high, but again, just created a lower high, right? I guess you have the higher low here, which helps a bit. But I will say this is that I don't like it. Okay, there's so much of the tech sector propping up both indexes as well as financials. So I actually want to show you guys something quick here. So this is Steve Eisman. If you guys don't know who this is who Mark Baum's based off of in the movie The Big Short. But let's just take a look at what the weighting is, right? Like infotech, 35%, financials, 35%, communications, 10%, right? Like you can see this. The performance of real estate was 0%, like on the right here, right? It was 0%. And I'll be honest, like the things like the HGX, like the HGX was actually down 5 points, and it's actually on a very big decline. And I've talked about this before, but I'll do it again. But usually when this starts to divert, the SPX is ready for a nuke lower. And I'll be honest, it's nuking lower, right? Like here was its first decline. It set a lower high, and then it did a big sell-off, and then the SP followed shortly after. Here it peaked, right? Like here it peaked. It set a lower high, it set a low, and now it's just setting a lower high, but it's still on the decline. This really freaks me out. Right, because when real estate goes, you know shit's bad, and we know about tranche opportunities and private credit and whatnot. We know about real estate and how home selling has been if we've paid attention to anything. And I mean mortgage rates, like they're sideways. They're not really down. They're sort of down, but I'd argue this is sideways. And there's a weird scenario where this could tick up even though interest rates are lower. Real quick here, credit spreads too, like, it's showed no signs of slowing yet. What I don't like to, and we're going to get into the VIX talk in a second, is how much support the VIX has and the chance for it to rip fucking higher right now. We're not out the woods, and like I know people on timeline are like, wow, it's been so bullish, great. I have zero clue how people see another 10 or 12, 20% uptrend next year in the SPX. I've no clue how people see it. Like, I don't even think it's possible. But regardless, we're going to come back to the weighting. So take a look at just the weighting and the performance year to date. Talk about financials here, like the XLF, right? Like, if this goes, and I mean, I would say right now it's just undecided. Like, it did make a higher high, but I would argue that this is still undecided. It looks like it kind of wants to start crossing soon. And we know breadth is lower right now, like especially in the SPX. I kind of forgot to share that, so I'll do it right now. But like, if we just make a higher low with the SPX breadth and this cross, I mean, by all means, guys, like look out below, right? But I mean, in general, like many of these private credit and hedge funds, like all these, right? Like this is floating capital, or this is Pennant Park. This is Ares. This is Trinity. Like a lot of these are what do you call it? CCBDs? Is that the right term? And Morgan Stanley Direct Lending, Blue Owl, JP Morgan has been kind of just chopping, but it's still failed to break out. Goldman Sachs, like, yeah, it's been good. It's been up, but I'd argue that the steam is running out again. Like when you start to get this kind of pattern here, like you can see it here, it kind of just moves sideways, right? When you get these straight ups, but it's just move sideways, it's usually a decline or just chop sideways. But how the SPX is currently acting, it's kind of just to me a warning of like, hey, like, you know, shit's not looking too good. Like Eagle Bancorp here, another, you know, another financial entity here. Like a lot of these are really just showing like they're kind of at their last phases of either one going sideways or two going down, or they've got a little bit more in them to rise, but not much. City's still doing pretty well, which is actually a little bit surprising to me. I would say this is one of the not necessarily banks I agree with. Like I just think City does things. I don't know. Anyways, but the reason I think these are down genuinely is because of this yen carry trade, right? They cut rates last week, and I mean, look, like it swept a low here and then just perked up. This is weak, right? So when the USD yen is up, this is weak, right? That's not good, right? Like anything over 1.57, which we're at right now, is bad. If you get up to like 1.6, I mean, my God, I don't even want to know, right? Like the dollar's just like the dollar's still pretty weak. Oil is kind of shooting things. Gold is still ripping pretty straight. Silver's still ripping. Silver's making new highs right now, and that's not good. Like I think silver generally runs up to anywhere from like $100 to $200 range, adjusted for inflation, no problem. Right? Even our U.S. yields, like they're still up. Right? Look at these. They're still up. The 10-year's still up. The 10-year -2 is ticking higher again. Right? The Japanese yields, they are the highest they've ever been. The highest. Right? Or not necessarily the yield. Like it's the weakest it's been, but the highest. If that, it's hard to explain because it's inverse, right? Like higher is worse. So it's the weakest it's been. It's like there's been a little bit of the Japan carry trade talk. I don't like it's hard to explain. I don't think this is good at all, and I think it's sending a warning that it does not like what the Bank of Japan is doing, and I don't think foreign entities have trust in these anymore. And I'll be honest, when these implode, it's going to cause a massacre, like an absolute massacre. There's so many entities and governments levered on Japanese bonds and stuff. I'll be honest, their economy sucks. There's no demand for their stuff. It's just, I don't think people are paying enough attention to this. I think people are too distracted on Trump and Trump's market. I don't think they're focused on the foreign aspect of things. That's where we're going to leave it. The VIX here came down to its support again. It's just testing its support. This is the VIX structure. Tons of support here at 14.5, right? This has a chance to kind of bounce and absolutely send. If it can eat through this negative gamma here, that like in January, I mean, my God, just it's going to absolutely fucking fly. So, oh man, like this is what I mean too, is like the VIX can't go much lower, and the SPX running out of steam. It's just the unwind, I think, is going to catch a lot of people off guard. You know, and again, Bitcoin is front running this. It knows, right? Bitcoin is so liquidity sensitive. Everyone's got access to it around the world. Like it knows, and people just don't seem to accept that this is going to happen next year. And I mean, if you don't know and you haven't taken profits, you don't know already. Like it's just whatever. And again, I hate being the bear. I really do. I love bull markets. It's the best time to make money. It's the easy, like bull market's easy mode. But I think people are really, 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 really close-minded and sidetracked into thinking like nothing's wrong, nothing ever happens, everything's fine, we're gonna get bailed out. And I'll be honest, there's a point where you can't be bailed out. The Fed already said they won't bail out markets. They're buying T-bills. They're not injecting money into the S&P. Okay, they're trying to cover asses and bring this shit down. And again, we know all the geopolitical tensions. If America pisses off the rest of the world and they dump our bonds and they dump Japanese bonds and everything unwinds, it's not going to be fun. And people are going to lose retirement plans. They're going to lose savings. They're going to, you know, there's going to be an inflation spike. Like, you can't run economies hot, and you can't run geopolitical tensions hot, right? You know, God forbid Japan gets a crazy earthquake where they're going to have to try and bail out their country, you know, creating a debt crisis, like an emergency funding crisis to help people and help rebuild and whatnot. Like, and we've seen the earthquakes tick up there too as well. If that happens, and that's the reason we unwind as well, I mean, listen, I don't want to bet on disasters because no one should ever have to go through suffering and like that. But I really don't think people understand where we are at right now and why things are doing this. Okay? And again, the earthquake thing isn't like a schizophrenia thing. Go take it. Just go research it. Like, it's been quite an uptick up there in that general region. And again, like, all it takes right now is one thing to push it over. Whether a hedge fund has to sell the index and we push in a negative gamma, you know, maybe the yen unwinds, maybe the bonds unwind, maybe we run into a bunch of dealer net short and get pushed in a negative gamma and index can't recover. I don't know. It's just, it's literally like you could flick a fly right now and anything could happen. And we all know it's going to. Like anyone who's smart knows this is about to happen. But remember, the market can last longer than you can remain solvent, right? It can be more irrational for a longer period of time than you can remain solvent. So you just have to be capital reserved and be aware. Anyways, that's a lot of rambling for me. This is a long one. I hope you guys enjoyed this episode. Yeah, if you guys have any questions or comments, drop them below. Yeah, take care.